Hi, welcome to the webinar. We are so thrilled to have you with us. I hope you had a great Thanksgiving weekend. We are back and ready to learn. We have two fantastic speakers with us. We will be covering the do's and don'ts of Ira LLC self-directed real estate investing, which is an exciting topic. It's a strategy you may or may not have heard about. Even if you have heard about it, you are going to learn a lot more detail about it, and you'll be able to ask questions to our experienced speakers. We have David R. Calderon from BarthCalderon LLP. He is a partner at the firm, and he is with us with 29 years of experience, licensed to practice in all of the courts in the state of California and in the U.S. Supreme Court. He is the senior partner at the firm and head of its dispute resolution practice. He has a passion for prevention, risk mitigation, and deterrence of claims through strategic asset protection planning, business planning, estate planning, and deal making. So he is your guy for asset protection. He's going to be talking about how the self-directed Ira LLC does that for you. We also have Kaaren Hall, who's the CEO of UDirect Ira Services LLC and OCREIA. Despite being in the midst of a recession and mortgage market collapse, Kaaren Hall founded and made a resounding success at UDirect Ira Services. She discovered a strategic way to put her 20 plus years in mortgage banking, real estate, and property management to use. The solution was an untapped market for both her skills and for investors, self-directed IRAs. So she's our self-directed IRA expert as well. I think the two of you are going to do a fantastic job at explaining everything that we need to know about this investment strategy. We do have 60 minutes, so the presentation will be about that long, maybe a little less, and then we'll have some Q&A where you can enter in your questions. Please remember to put in your questions in the question box, not the chat, so that we can keep a better track of what's been answered. And I will be sending you all the recording tomorrow, so keep an eye out for that in case you miss anything. Don't worry about it too much. And with that being said, I'm going to hand it off to David and Kaaren to get started, and I'll be back for Q&A.
Thanks so much.
Thank you.
Appreciate that, Alexandra. I appreciate being invited. David and I are going to be talking about so many different aspects of self-directed IRAs, and David invited me, so thanks. I appreciate it.
Yeah, no, Kaaren is the expert, man. She's the go-to with this stuff. So take it away.
We'll kick it off. Yeah. So what's most important is, you're sitting here, you're watching this today, and you've got questions. How can you use self-directed IRAs for your deals? How can you use self-directed IRAs to build your own personal wealth? And how can you do that by following the rules? You want to play to win, right? And it's kind of a game of keep away. We're going to talk about prohibited transactions, what you stay away from. And by following the rules, you can just really score on your retirement by using the self-directed account. It can be an IRA, or it can be a different kind of account. So I'll go over that. But what's really most important to me, and I think to us all, is your questions. Like, what do you want to know? So share your questions, and we're going to address each and every one of them that we can get to in this coming hour. So I'll start it off. I do have a PowerPoint, but I think it's more interesting to talk and just share and interact. So I'll talk about the fact that you've been able to self-direct your IRA since IRAs were invented, and that was in 1975. That's when President Gerald Ford signed the ERISA laws into effect. It's probably before most of you were even born, so it's nothing new. Self-directed IRAs have been around for a really long time. And it's tried and true. I mean, as far as the IRS being aware of them, and as far as these rules, there's case law and so forth supporting all this. So it's nothing new. Self-directed IRAs in general represent, billions of dollars of investment capital, but the overall pie of retirement savings is something like $35 to $40 trillion. It's just, wow. I mean, that's more than the national debt, right? So it's a lot of money. And I tell you that because that money can go into your deal. If you're a syndicator, if you're an asset sponsor, you're raising capital, IRAs, so 401ks, this is a place to go when you're looking for capital. Now there are rules, and David can talk about that as we go further about like what percentage of your capital raise can be from retirement accounts before you have to file some certain paperwork. But yeah, that's a lot of money to dip into. And how do you do that? The way you do that is you ask your prospects, do you have an IRA or do you have a 401k with your previous employer? Because if the answer is yes, then they can take the money from where it is, move it into a self-directed IRA, and then request that the money be dispersed into your private placement or maybe as a note, debt or equity into your deals, all right? And same thing, if you're a listener who's just getting started in self-directed IRAs or in investing, and you wonder, like, how can I even get started here? That then you could, all you do is open, fund, invest, right? You open an account, you get it funded, and then invest. So we've got a couple questions that I'll, because I really love this popping in with the questions. I think it's the way to address everything. So we've got somebody anonymous says, can I self-manage an apartment building in a self-directed IRA? For example, collect the rents, screen tenants, hire maintenance. And that is such an excellent question. The answer is yes. Yes, you can do that. Normally with IRAs, you want to keep things arm's length. There's no personal, benefit. There's no self-dealing. You're not allowed to offer services to the plan. All these things are called prohibited transactions. If your IRA commits a prohibited transaction, it's just game over for the whole account, and you lose your tax protection, the tax deferred status of your dollars. But when you've got real estate, as long as you're not, swinging the hammer, you're not out there changing that, right? You're not changing the water heater at 3 a.m. You're not doing the work. You're hiring third-party vendors. You're okay. So yes, screen tenants, absolutely.
Not just you, but also your kids or you got to watch out with that kind of stuff. Family members, things of that nature could be
up and down
considered
the
by
family
the
tree.
IRS. To be self-dealing. So you have to be really careful with that kind of stuff.
And you bring up a good point, David. So it's you and your spouse, right? And then it's your parents and grandparents and your children and grandchildren. All these people are disallowed to the IRA. They can't provide services to the plan. Same thing with anybody who's a 50-50 business partner or somebody who's a fiduciary to the deal. They're also a prohibited and disallowed party. But aside from all that, all those people can provide the services of maybe picking up and collecting the rent check made payable to the IRA, screening the tenants, obviously finding the deal to begin with, and hiring third-party vendors. So that is just such an awesome question. Anonymous, thank you. Appreciate it. We've got Joel here. Joel says, why do self-directed IRA programs have such high fees compared to standard IRA investment plans? Man, I love this question because first off, with UDirect, our fees aren't very high. Our fees, it's a $50 setup fee to get started, a $275 a year annual fee, a flat fee, regardless of the number of assets in the account and regardless of their value, okay? That's amazing. A lot of companies will charge per year per asset, or they'll charge a flat fee plus a little more if it's a note, a little more if it's real estate, and there are different fee structures. Ours is just straightforward flat fee. Okay, now, why are they high compared to like a typical IRA? Like maybe you've got something over at, I don't know, let's just pick one randomly, like Charles Schwab. Why is a self-directed IRA fee higher? Well, it appears to be higher, but it's not, okay? And if you don't believe me, tune into John Oliver, like what was his show? He's just so funny. It's on HBO. He does this thing called Teacup Pigs. So just Google John Oliver Teacup Pigs. That will answer your question on how the major financial houses, how they make all this money on the back end that you don't necessarily see, okay? Our fee is straight up. So if your IRA invests, say, in an apartment building and maybe in a syndication and you get this profit, you get to keep all that profit except for, the fees that are taken out, the $275. We're not taking a percentage of your deals to get into the deal. We're not taking a percentage to get out of the deal. We're not taking anything on the back end. We're just charging you the straight up fee. So with the other self-directed or with the other like typical IRAs like the Schwab, the TD Ameritrade, all these, they're charging fees on the back end that you won't see. And again, the John Oliver Teacup Pig expose is funny, and it really goes into some depth on that. What do you have anything, any anecdotes on that, David?
On the fees that are charged, things of that nature?
Yeah.
Yeah, no, I just know with my own like personal, accounts and things like that, yeah, they can, those guys can gouge you. But obviously, I think if you go through a professional custodian like yourself, you can avoid a lot of those kind of fees that are associated with that type of thing.
Awesome.
Or at least minimize them, put it that way. Yeah.
So Joel's also asking us here, please discuss using self-directed IRAs to buy investment real estate. That's like fourplexes and commercial apartment buildings. Absolutely. So we know how you get a stock in an IRA, right? You log in and you just pick your stock, or you talk to your financial advisor, and now you've invested. But with a self-directed IRA, it's kind of just the same as buying real estate in any other way, except you do have to steer clear of the prohibited transactions, as we mentioned. No self-dealing. You can't buy, sell, or exchange assets between the plan, the IRA, and any disallowed person. We talked about the disallowed people. And you can't offer services to the plan. Okay, so that's what you're keeping away from. So how do you do this? First, you open an account, and so that you have an IRA that can buy the asset, because you're not personally buying this asset. It's the IRA or the IRA-owned LLC that David will expound on later that's actually acquiring the asset. So you open the IRA and get it funded. Opening an IRA takes maybe 24 hours. Getting it funded can take maybe up to 2 weeks while we're waiting for the other, custodian to bring the money over and into your account. So that is kind of a timeline. But once we get the paperwork, it's typically 24 to 48 hours before it's funded out. So it happens real fast once we've got everything that we need. So that's how you get in. So you open, you fund, you invest. You give us the paperwork that talks about the IRA acquiring the asset. We review it, not to say if it's a good or bad investment, but to see if it's vested correctly and so forth, if the IRA is actually acquiring an asset in exchange for the funds. And then we fund it. And then after that point, your IRA is now self-directing. You've got an asset in there. 100% of the proceeds from that asset that belong to your IRA have to go back in the IRA that owns the asset, if that makes sense. Some people will have a self-directed IRA, send the proceeds over to some other IRA. That's taking constructive use of your IRA funds, and that is bad news. It can be a prohibited transaction, so you stay away from that. And another thing to remember is when your IRA has invested in real estate or any other asset, that all expenses of the asset have to be paid for by the IRA. Now, account fees can be paid by you personally, but if it's, let's say your IRA owns an apartment building or you're in a private placement, there's a capital call, you can't pony up the funds from your own personal checking account. They have to be IRA funds. So if your IRA runs short and you don't have enough to make the capital call, or if your IRA owns property and you need that new water heater, how do you pay for it? And the IRA doesn't have money, you can always make a contribution, contribute, which depends upon your age, your account type, your income. And so every IRA type, every retirement account type has a certain cap on how much you can contribute. That's one way. You could sell other assets in the IRA and use those proceeds to, pay whatever expense needed to be paid. There are a few different ways, and we can go in deep on that at another time. But basically, when your IRA acquires real estate and commercial apartment buildings, it's just like you're doing it with your personal cash, taking into account the prohibited transaction rules. So if you're going to do this, you got your gun loaded, you're ready to take off and close on this deal, call us and talk to us like, hey, this is what I'm looking to do. How does this sound in an IRA? And we'd love to hear, about that. So got some other questions here. Anonymous says, how do you transfer money from a 401k in Ameritrade to a self-directed IRA? Do you just open the IRA account in your bank and transfer? No, what it is an IRA to IRA transfer is one thing. If you have an IRA account and you wish to transfer to a self-directed IRA account, you fill out our transfer form, you sign it, you give it to us and we sign it. We send it to your current custodian and they bring the money over into your account. All right, that's a transfer. If you have money in a 401k, that's a rollover. And so then you roll the money over, but it's a process that can take a little while. So the three ways to get money in an IRA is contribution, IRA to IRA transfer, or employer plan like 401k, 403b, 457, or rollover into a self-directed IRA. So that's how the money gets in there. So first off, you open the account, and then once the account's open, then you have a bucket to put the money in, and then you begin the process of moving the money in. Anne asks, how does a Roth IRA impact real estate, investment in real estate? Do you take advantage of tax-free growth and value and rents? Yeah, you really, really do. So understand how a Roth IRA works. A Roth is the newest IRA. I mean, it's not brand new, but it's the newest type. And so with a Roth IRA, first off, there are a lot of rules that may be coming out from the Build Back Better Act. So this could change after 2022, after the Congress is done looking at this Build Back Better Act. But today, to have a Roth IRA and to contribute to it, you have to be under certain income caps. And we have that on the UDirect IRA website. You go to UDirectIRA.com, look at contributions, and you'll see the income cap. So you can contribute to an IRA. And by the way, they may end the Roth converting pre-tax dollars into Roth by the end of this year. So if you're thinking of a Roth conversion, this is the time to do it. So if you have a Roth IRA, and you can invest tax deferred always and tax free for life, as long as you meet qualifying situations. One is having a Roth for 5 years, and the other is hitting 59.5. That's when it turns tax free. That's when you can take it out tax free. But when you open an IRA, invest with it, those proceeds go back into the Roth and you're not paying tax on it. I hope that addresses your question. Anonymous says, please discuss the use of non-recourse debt in a self-directed IRA and the calculation of the associated UDFI taxes. Okay, Anonymous, you're a smart cookie. So let's talk about that. Right, so your IRA can buy real estate. When you and I buy a property, typically we're buying our house, we're going out and getting a mortgage, and we're used to that process. Everybody pretty much knows that process. Well, when an IRA buys real estate, an IRA can take on debt, but it must be non-recourse debt. Now, if you'd like a list of non-recourse lenders, I have that. I'd be happy to share it. Email me, info@udirectira.com. I'll send you a list of non-recourse lenders, okay? If you want your IRA to borrow money, you can't go to your bank. You're not going to get a Fannie Freddie VA loan for your IRA because there's no recourse against the IRA. But you can take out your IRA can borrow money. It's like a commercial loan called a non-recourse loan. Now, what that means is that if the IRA defaults on the debt, the lender can come against the asset, but not against you personally or any other assets in your IRA. So there you go. So your IRA can borrow money through a non-recourse lender. And as Anonymous points out, yeah, there's tax. So even in a Roths and traditional Roth, SEP, simple, spousal, inherited IRAs, 401ks are all tax deferred, income tax deferred. But most of those accounts can have these special kinds of taxes. One is UDFI, unrelated debt financed income tax. There's like a cousin tax called UBIT, unrelated business income tax. And if you want to take a little note here, I'll give you a second to get a pen. And I'll mention that you can learn about this and go more deeply into this on the IRS's website. irs.gov, publication 598 is where you'll find information on these two types of tax to the IRA. So basically, say, for example, your IRA buys a house and it's worth $100,000. That's awesome. And now here come your rent checks every month, say it's $1,000 rent, that's great. Well, you invested in that $100,000 property, say using $70,000 of IRA money, and $30,000 or 30% was debt, okay? UDFI tax applies to that 30% that your IRA earned because of debt, all right? That's what's going to be taxed. But I recommend that you discuss this with your tax advisor, since I don't give tax advice, but I can tell you where to find it. And that's pretty much how UDFI works. You want to calculate it out at the beginning of your deal. You want to be careful because, because it is an expense, and you just want to begin with the end in mind. But with UDFI and with UBIT, you do get to write off expenses. So have that discussion with your tax advisor. So Anthony wants to know, is this also available for a Roth IRA? I don't know what this is in your sentence, but everything that we're talking about is the same for traditional Roth, SEP, simple, spousal, inherited IRAs, solo 401ks. What we're talking about today is available for all of these IRA types. Any differences in the rules? Again, the rules are the same pretty much. Every IRA has different parameters having to do with how much, like your income limit to qualify, or sometimes you have to be self-employed and things like that. All right, so many questions here. Hopefully I'm getting to them all. If I'm not, you'll have to, we'll have to, they're just kind of bouncing up, so hopefully I covered it all. But Anonymous says, does the IRA have to be open and funded before you make an offer on an apartment building? I want you to think about that. The answer is yes. And the reason it's yes is when you make that offer, the seller's not like, oh, I'm going to wait 2 weeks until you get the money. They're not going to be really happy about that. They're going to want earnest money at least now. So you want to open and fund the account definitely before you even think of investing, before you're looking for that building, because it could take 2 weeks before that capital is ready to secure a deal. So absolutely open the account, get it funded, and then search for your project. Absolutely, because you want to be able to execute on it. You want to go forward. Boo is asking, if you have a personal SEP IRA, does the LLC allow you to set up another IRA for yourself again? Okay, so let's talk about that. A SEP IRA, SEP is an acronym for Simplified Employee Pension. A SEP IRA is sponsored by an employer, whether you're maybe you're self-employed, but it's sponsored by an employer. So it's not really a personal SEP, it's a business SEP. Okay, a SEP is always tied to a business. But the SEP IRA, what it really is it's just a traditional IRA on steroids. So yes, you can have an unlimited number of IRA accounts, of retirement accounts. The only thing that's limited is your contribution, how much you can contribute to all of them en masse, right? So that's limited. So you can have other accounts. You just can't, your total amount, the total nut that you contributed in 1 year is limited. Okay. Oh, wow, these are such great questions. I'm just like loving these smart people, man. How about DSTs? Can a self-directed own shares in a DST? Yes, yes, the Delaware Statutory Trust, an IRA's best friend, which is to say that it's pretty easy. There's not a lot, not a lot of excessive things on the outside. People, yes, people invest in Delaware Statutory Trusts quite a bit. Of course, they're also used in 1031 exchanges. IRAs can definitely invest in the DST. And an IRA-owned LLC can do so as well. So yes, that is an asset that is allowed in an IRA. I should explain too that with self-directed IRAs, you can invest in anything except life insurance contracts and collectibles, okay? Life insurance contracts and collectibles are out. The other thing is that a custodian may say that some assets are not administratively feasible. That what that means is that the custodian has made a business decision not to custody that asset. Some custodians don't allow you to have or won't custody an IRA-owned LLC that we're going to talk about with David today, but we do. Some custodians won't let you custody, they won't custody racehorses, and some will, so you want to talk to the custodian to make sure they will custody your asset. That's really a good question. Steve is asking, any restrictions on the IRA being a partial owner of a piece of investment property? There are no restrictions, and I'll describe that. Now, I did mention there are prohibited transaction rules. Those are restrictions. But say, for example, there's a piece of property, even if it's like you and your spouse, you're disallowed to each other, but if you close concurrently on that deal, it's like a loophole. You can invest with anyone concurrently on a piece of real estate. So just understand you just need to close at the same time and you're just fine. You can absolutely partner with other people, whether they're disallowed or not. That is a really, again, man, awesome questions. Anonymous chimes in again with more brilliance. Let's see, can the property for a self-directed IRA be purchased in a foreign country, or does it have to be USA only? All right. An IRA can, again, can invest in anything except life insurance contracts and collectibles. So foreign real estate, the answer is yes, an IRA can invest outside of the country. When an IRA invests in a foreign asset, it's incredibly good to know that you may have tax benefits on your US tax, but you may still have to pay foreign tax on that asset with no tax protection. You know, the IRA it protects you from United States tax, income tax, right? So before you invest in a foreign country, understand their taxation, because again, that taxation is an expense of your IRA owned asset. That tax, that foreign tax, will have to be paid for by your IRA. All right. Now, because of the FBAR rules, if you want to look it up, FBAR, and understand the rules for reporting on wires to foreign countries, came up about 5 or I don't know, long time flies, right? Came up a while ago. We do not allow direct, it's not administratively feasible for us to allow direct investments from the IRA into foreign countries. But through the IRA owned LLC, that can happen. So just know that. And plus, a lot of foreign countries don't recognize an IRA as a purchaser like they recognize an American corporation or an LLC. So that is a long answer to your question. Hopefully that was good. And so here, Amy says, I found non-recourse lenders and still want our personal Social Security information. She's found that the lenders still want their personal information, even though the credit score is not used in the decision and the loan is non-recourse. Do I find that, and does it cause a problem with prohibited transactions? I think they just want to know, I mean, like any underwriter, they want to know who they're lending to. You're not personally qualifying for the loan. The loan isn't being, you know, you have to ask them why they want it. And it would be a case-by-case basis on why they want it. What do you think, David?
Yeah, I would jump in and say you can't personally guarantee the loan, for example. So I think anytime you're mingling your personal information with a determination of whether or not the loan's going to be issued, I think you're asking for trouble. I think you need to look at, and we'll talk a little bit about this when we talk about the LLC function, but you really need to look at the self-directed IRA as standing on its own 2 feet, separate and apart from you. So you have to really guide everything through the self-directed IRA or the self-directed IRA LLC and keep it away from you personally as much as possible in case the IRS comes sniffing around. So, But yeah, I agree with Kaaren. I would ask why do they need that? Why do they want it? I know a lot of these loan processors have checklists and things, punch lists they got to go through when they are putting together their loan financing package. But yeah, if they know their stuff and they're dealing with a self-directed IRA, they know about self-directed IRAs, they should know to veer away from that. So.
Awesome. Well, let's go to Anthony's question. Anthony says, if there's no financing involved in the purchase of a property, then it's correct to say there's no UDFI tax, right? That's right. UDFI is unrelated debt financed income tax. So if there's no debt, there's no tax. And so normally, like with Delaware statutory trusts, you know, and notes and things like that, where you're not borrowing money, you know, no tax. All right. Mo says, if I can keep this on the screen, can one transfer all 401k or pension funds as a lump sum into a real estate IRA? Yes, you can. But wait, there's more. But what you need to do is you pretty much have to have left that employer. If you're currently working for the employer and you want to move the money over, they may not allow you because it may be in the plan document that you have to leave the money in there while you're still working there. If you have a 401k though, and it's a 401k with a current employer, there may be something called, what do you call it? It's, I'm just going to think about it real quick. Just left my brain. It's an exception. So to be able to move the money over. So you can ask your plan administrator, hey, look, you know, I still work here. I'm employed here. I'm in service. Can I get an in-service transfer? That's the correct phrase, an in-service transfer. And they might say yes. Maybe you've reached a certain age threshold. Maybe you, the company, like you worked at company A and it got bought up by company B. And so the money you had in a retirement account while it was company A, that can be moved over. So ask your plan administrator if you can move it over. But yes, a lump sum, people do that every day and move their money to us every day like that. Okay, Anthony says, if already under contract to purchase with a down payment paid on with non-IRA funds, is there a way to proceed with a self-directed IRA? All right, yes and no. Yes, you can proceed, but you're going to have to, first, what you're going to have to do is exit the deal personally, because your IRA can't buy an asset that you have a personal interest in, and you certainly do if you're in that spot. What you can do then is start a new escrow and a new contract where it's the IRA, the name of the IRA, that is the investor and not you personally. So now it's a new deal, new escrow number, new title number, then the IRA can do the deal. That's how you do that. David, do you have any opinion on that?
Yeah, no, I totally agree. I think, yeah, you'd have to redo the deal, and hopefully you're in a situation where with a seller that will enable you to do that. I know in this marketplace that might be kind of tough, but yeah, you have to, like I said, you want to have the separation, at least have the wall between yourself and the, kind of glancing at the corner of the screen, so I'm looking at the questions, between you personally and the, like I said, the IRA has to stand on its own with these things. So you want to make sure that there's plenty of distance between you and the asset. So
Okay.
you personally, I should say.
Okay, awesome. Anthony, I hope we covered that for you. Michael says, can you put existing rental properties into a self-directed IRA or Roth, or sell the property, pay the taxes, and then put it into a Roth conversion IRA and buy another property? And if the moon is full on a Tuesday, no, I'm joking. I mean, that's a lot, Michael. The answer is no. Okay, short answer. Your IRA cannot acquire an asset that you personally own. That's where we start off here. You can't have had any, even if it's a property you owned 15 years ago and sold, now your IRA is going to buy it back. You had personal interest in it at one point. I would just leave that alone and find another property.
Yeah, or if I'm looking at the question too, Kaaren, or if he may be asking, can you put existing rental properties into a self-directed IRA? The answer to that is clearly no.
Right.
But I think what he means, or a Roth, or sell the property, pay the taxes, and then I guess maybe take the profits himself and put it into a Roth conversion and buy the property. That kind of thing.
Well, let's understand, like putting the profits in, if that's what he wants, Michael, if that's what you want to do, you're capped on your contribution to your Roth. And if you're under 50, it's $6,000 a year for 2021 and 2022. If you're 50 plus, then it's $7,000. So I'm sure if you sold your property, you probably made more than 7,000. You're just capped on how much you can put in. There's no cap on how much your assets can earn. The return on investment, that's uncapped, unless you're Peter Thiel, right? But anyways, but yeah, that's another topic. But yeah, so no, you couldn't do that. You just couldn't. Arm's length and no. Okay, Anonymous, let's go to you again. How is the value of the self-directed IRA determined for required minimum distributions when it holds real property asset like an apartment building? Again, genius, love it. I love, this is better than me doing my PowerPoint because you're asking great questions. You have to get a valuation. And if it's for the purposes of a withdrawal, which is taxable to you, you're going to have to get an appraisal. So you get an appraisal from a third party appraiser that's going to give you the value. And then what you do is you take a withdrawal. So in order to calculate your RMD, you talk to your tax person, but on the IRS's website, there's a graph, and it's like you say, okay, I'm this age and this much money, this is my percentage, and you find your percentage. And then you multiply all your retirement assets times that factor. And that gives you the amount that you must withdraw as a required minimum distribution from your account. And you can take it from any of your IRAs, separately, like a little from each or together, as long as you take the whole amount. If you don't take it, and again, this could all change with the Build Back Better Act, but right now the penalty is 50% of what that RMD would have been. It's serious. So you want to definitely take your RMD, get a valuation. It's going to be taxable to you. So you're going to need to prove the value with a proper valuation or an appraisal, and then go from there. Okay. Anthony, our buddy Anthony here has, I have a C Corp set up under his 401k. That's great. A C Corp owns an LLC that purchases properties. He currently has one that he's had since 2010. Since he's been using this service that helped him set up and provides the record keeping to make sure that, he's all compliant and does a form 5500 every year. 5500 every year is for the, that's a form that you fill out and file for a 401k. He pays a monthly fee, which also includes 1 hour of legal representation for an outside attorney. Is this the kind of services you provide? Understand that there are different kinds of 401ks. We have a 401k at UDirect for our employees, and that's really like it follows different rules because it's a solo 401k for one person. And so it falls into the individual arena, but the 401k for companies with employees, like I have, UDirect has, we hire a third-party administrator to administrate our big, 401k for multiple employees. What UDirect provides is a solo 401k, and the account holder is the trustee of the plan. The account holder and their tax professionals are going to file, if necessary, a 5500 EZ or any kind of 1099 that needs to be filed. That the onus to do that is on the account holder when it's a solo individual 401k. Okay, so the answer is no, that's not the kind of services that we provide. All right. Anonymous wants to know if we have a crypto platform. Yes, we're just coming out with it right now. Yes, and it's where we have an arrangement now that we're in the infancy stages with. We're just starting to do some investments using Coinbase, which a lot of people have heard of. So that, yes, I can for the first time say that. So that's very exciting. Crypto has got everybody's attention, doesn't it? Anonymous says here, how much is it to set up a self-directed IRA? And do we prepare the operating agreement and help with establishing the bank account for the LLC? A lot of this is David's territory. I'll talk about the fees and go ahead.
Yeah, no, I was going to say we do that, and I can talk to you offline when we're done with the presentation if that's something that you're interested in doing. But when we put together a IRA LLC, we put together the operating agreement, do the filings to establish it with the state, things of that, or the various states that it may be registered in, things of that nature. So, but I can talk in more detail when we're done. So.
And as far as the bank account goes, a lot of times banks don't understand what you're saying when you say that you're opening a bank account for an IRA-owned LLC. They want to open an IRA for you. They don't really understand that it's really just an LLC bank account. So you need to make it clear. That's where we have, like the frequently asked questions. That's where there's a frequently asked problem or something like that, a frequently occurring problem. But we don't, because it's self-directed, understand? So we're not going to choose the bank for you. It must be self-directed. We're not advisory. And it's important to point out that we're not advisory or fiduciary. We're never going to recommend an investment to you. We're never going to tell you which kind of account is best for you because we just don't sell assets. We're not advisory. We're here to get you from point A to point B. So you have this tax preferred and tax protected kind of investing. So, it's kind of like an escrow company, they don't tell you what house to buy and they don't tell you if it's a good house or a bad house or how to write it off on your taxes, but they tell you how to get your money from point A to point B so that you now own an asset. So there's some similarity, some kind of a, comparison right there. Okay. Anthony comes back with a good question. He already owns 12% interest of our property and he wishes to acquire using the self-directed funds. The 12% interest was purchased 2 years ago under a single member LLC. All right. All right, so if you have a 12% interest in those funds and you want to invest more, you want to, and you like have a higher percentage of interest, I would steer clear of that. If you have a personal interest, don't invest in it with your IRA. I just wouldn't do that. I just wouldn't do that. People say, can I invest with my IRA? And the answer is just don't do it, because, all right, but there is, it just gets complicated, but there is a provision, it's DOL 2000-10 that says, it gives you an exception, and that's a long-winded explanation. I wouldn't touch it.
Yeah, I think you can, there's instances, I guess, if it's forward-looking where you could possibly set up an LLC to do that. Like where an IRA can perhaps partner with a disqualified person, but it gets very technical and it gets very everything has to be equal and arm's length, and it's kind of a royal pain. It's something that is would probably be better explained, I guess, in the context of an individual consultation rather than a presentation such as this. It's yeah, I think Kaaren is giving you very good tips in terms of just basically saying, hey, if it's something where there's even the tinge or the argument that you could be profiting off this yourself as opposed to your tax deferred retirement account, then you need to really scrutinize it and stay away if at all possible. So
Yeah, it's just not worth it, right?
no, the IRS will hammer you. Not only will you get nailed for things like early distributions, but also possibly penalties, interest, and it could go back for years because they'll go back to basically the origin of the transaction. And so you need to really be careful. You need to really work hand in hand with an attorney and with if you can, with an attorney and a CPA who really know their stuff in this regard. So
That's true.
All right.
That's true.
I see the couple people asking about PowerPoint presentation. Kaaren, I know that you created one, so we will send that to you after the call, but I love the questions. I think this is going really well in terms of covering what people really want to know. I had someone else ask me about David's presentation card as well. I'd love to get David on to talk a little bit more about the nuts and bolts of the asset protection side of it. I think that's really important. And then we could circle back maybe with some more questions at the end. I dropped in a couple resources for you in the chat, Karen's email, IRS document she referenced, and the John Oliver YouTube clip, so you guys can watch it on your own time. Check out the chat. All right, David, I'll hand it off to you.
yeah, no, I really, and I know we don't have a whole ton of time left, so I'll be as quick as possible. And that's okay because the stuff you're asking Kaaren is just really great stuff and stuff that you really need to know. And she's definitely an incredible resource for that kind of thing. But just talking about how the self-directed IRA works in terms of the investments and with the LLC, if you're investing using a self-directed IRA without the benefit of doing it through a limited liability company, then you're really exposing your whole retirement platform to the whims of creditors, if it's apartment buildings, for example, to tenant lawsuits and liabilities and things of that nature. An LLC or limited liability company provides protection to the IRA just as much as it would to the individual. Like, if you own an apartment building personally or with a group and as part of an LLC, you get that limited liability protection. And a limited liability company really is like the Swiss Army knife of entities. You can do all sorts of things with it in terms of management, in terms of how it's taxed. Normally in a situation like this, it would be a pass-through taxation kind of thing, like you would have with other property holding LLCs. But what it really does, it provides the IRA, which is the owner of the LLC, with inside protection from inside liabilities, meaning liabilities that come from the operation of the business or the use of the asset, like tenant lawsuits, things of that nature. And it provides outside liability from the standpoint of liability that comes to the owner of the LLC, the IRA itself, or even possibly you personally. And with a limited liability company, as many of you may know, if you've gotten into sophisticated asset protection planning, there are some states that are better jurisdictions for limited liability companies, especially single member limited liability companies like an IRA LLC might be, than others. So states like Nevada, Delaware, Wyoming is a great one because it's really cost effective. You could form your limited liability company in one of those jurisdictions and then register it to do business in the jurisdiction in which you live or which your IRA resides or where the custodian resides for your IRA as well. And like, for example, here in California, if you have California basically has charging order protection. I don't know how familiar you guys are with charging order protection, but what that means is that if a creditor comes along and tries to liquidate the assets that belong to the LLC, which in this case would be the assets of the IRA LLC, they're blocked from doing so. All they can do is get a charging order against distributions from the LLC to the owner, which in this case would be the IRA. Now, California doesn't really like single member LLCs. California also over time can chip away at the charging order protection, but in states like Wyoming, Nevada, Delaware that have pure charging order protection, they can't do that. All a creditor can get is the charging order. So they can't go in and liquidate your apartment building, for example, or liquidate the LLC, the IRA owned LLC's apartment building. When they get a judgment, they got to kind of stand around and wait. Not only that, but they also get the tax liability that's associated with any potential distributions as well. So, and if in California, for example, if you have, like I say, a Wyoming LLC that's registered to do business in California, if you're up to date with all of the protection, the forms, the filings, if it's truly doing business standing on its own, California will recognize the law of the formation jurisdiction, meaning that they will apply Wyoming law to creditor decisions and things of that nature as well. So, so really that's kind of the nuts and bolts of the asset protection end of it. Let me see if I can get some questions. I see the questions are kind of coming in fast and furious. I'm trying to see where.
One of the questions was talking about having, using a Wyoming corporation. And isn't it true that if you're doing business in California, you still have to pay that FTB, that they're $800?
You do. Yeah, in Wyoming, I think it's only $60, their statutory fee. In California, it's $800. And if you have it, registered, formed in Wyoming, registered in California, you'd have to pay $860 a year total. But if you look at it in terms of how much revenue that's probably being derived by an apartment building or rental units, it's really kind of a small price to pay in order of the cost of doing business.
Yeah, and so those fees would be paid by the IRA since they're expensive.
Yes, and it's another, thank you, Kaaren, and that's another great point. If you're setting up the IRA LLC, you do it all through the custodian. Basically the IRA, the fees, everything that's associated with the IRA would be taken care of or paid, by the custodian. As Kaaren said, the custodian's basically kind of an escrow holder for that money. So you avoid, dipping into your own pocket to pay these fees. You would not want to do that, nor would you want to pay the fees you personally for the setup of the LLC. That would be handled by the IRA itself, and for which you would direct the custodian to pay those fees as well. So let's see, PowerPoint thing. What happens to when you self-directed IRA with LLC when you pass away? I think, basically what would happen is it would go to whoever you designated as the heirs to the beneficiaries, I guess, of the IRA, and that would become their responsibility.
What happens at that time, just as David has said, it passes on to the heirs. And so say, for example, it's like brother and sister and they get 50-50. Yeah. Well, then each of those two beneficiaries would receive, the money would be split into two inherited IRAs. So it doesn't even go through probate. It just goes straight to the beneficiary as an IRA, which is kind of cool.
Yeah,
because an IRA is like a trust. And so then you'd have an inherited IRA, and there's just a lot to know about that. That is a deep topic. But you have an inherited IRA, yeah. Yes,
and it's something we can talk about offline, I guess, for lack of a better term. An anonymous attendee asks, is it that the LLC will be the title holder of the property? Yes, the LLC would own the property. Regarding asset protection, if you're going to acquire multiple properties in your IRA, should you form a separate LLC to own each property? You could do that, be part of more of a sophisticated asset protection structure, I guess, as opposed to like the IRA could own multiple LLCs, for example. So it all depends on how many properties you have, whether or not it's worthwhile to you as a business decision, because also to, the more businesses you have, the more administration you have, and the more cost of doing business you have with that too. Again, that would be a good topic for more of a deep dive. This Q is for David Boudin. If you converted S Corp to LLC at state level, state secretary stamped on the application, do you have to notify the IRB federal level? There's the EIN for the S Corp. On a conversion, the EIN for the converted LLC should remain the same. As far as, you know, other notifications, things of that nature, I'd probably need to know a few more facts in terms of what you're asking. Oh, Iras, okay. No, basically I'm sorry, I looked at your question right below there where you called IRB and I was going to say IRS. The IRS, yeah, that paperwork would all be taken care of as part of the conversion. So, and does California charge $800 a year for the Wyoming LLC? The answer, I think we already answered that one. That is yes. Doesn't having LLC invalidate the exemption for rent control for single family homes? Again, that's probably a question where I'd have to know a bit more facts and maybe discuss whatever the rent control ordinance is. Off the top of my head, I'm not sure that's necessarily the case. But like I said, that would be something we probably have more of a deep dive of off when we're done. If Sylvia Ponce, thank you. You're welcome. I don't know if it's for me or for Kaaren, but I speak for both of us there. Anonymous attendee, if I understand correctly, the LLC owns the property and the IRA owns the LLC. That is correct.
That is exact. You know, thank you so much for saying that, because that is just straight up right. You know,
Yeah.
that's so. If the IRA is the umbrella that owns the LLC, that then owns the property. Yeah, goes that.
Yeah, let me see if I can get to the chat here. I'm trying to juggle between the chat and the
Yeah, just so you know,
the
I have
question and
been
answer.
encouraging people to put the chat in the question box. So most of them have done it already. There's not a whole lot different in the chat than in the questions, I think.
Yeah.
So let's all just do the questions, because I think that the question box is easier to go through.
Yeah, okay.
Yeah.
So, basically, a lot of the, like, so I think we've gone through a lot of the do's and the don'ts very quickly of having self-directed real estate investing IRA LLCs. Big thing, stay away from self-dealing. Anything that's going to come up that could possibly be self-dealing is stuff that the IRS is going to sniff around and could result in big liability. Prohibited transactions, like Kaaren said. Be careful, doing a lot, you don't want to rent the place to yourself. If it's an apartment building, you don't want to rent one of the apartments in the building, for example, to yourself. You got to watch out, even if you rent it to kids or your parents or things of that nature. It strictly needs to be an investment vehicle that's set up to benefit the IRA and deferred tax. Yeah, don't make offers on properties in your own name. Do it completely through the IRA, the self-directed IRA. If you have an IRA LLC, through the LLC. Any funds that are going to be used in the transaction have to come from the IRA. You don't want them making pit stops in your bank account or somewhere else. You want the direct line to be between the self-directed IRA and the IRA LLC and the actual transaction itself. You can't personally guarantee transactions that are done in the name of the self-directed IRA or self-directed IRA LLC, that sort of thing. The transaction with the IRA LLC has to stand on its own, self-directed IRA.
So I'm sharing in the chat with Alexandra. Maybe I can just send to everybody, but how we title assets, it's a little different. And it's done like this. It's your first and last name, comma, legal owner via non-trust custodial IRA with AET. AET is our trust company. So that's how it is. So it is your name and you do sign it, but you're signing as the legal owner of the IRA. The reason that that's done is because the old vesting would be like custodian for the benefit of the IRA. And then maybe you'd have a house that's titled that way. And then perhaps that house was neglected and there was some weed abatement or something. Well, then the city needs the weeds mowed. So they're going to say, well, who owns that property? And they're going to see the first name. It's going to be the name of the trust company. It's like, no, they don't own it. It's the person who owns it. It's the individual's responsibility to make sure that their IRA owned asset has their weeds, all taken care of. So by putting the account holder's name first, it really shows who's responsible for the asset. So that is in the chat. I can't hear you, David.
No, so we have, I apologize, Kaaren.
Yeah.
We have, I'm looking at some of the other questions here.
Yeah.
Steve Lammer wants to know, what are the protections to ensure the administrator doesn't take the IRA funds and head off to the Bahamas? All right.
Well, it's called federal law.
Yeah, exactly. I don't think the administrator wants to go to jail. You know, so yeah, that's kind of, I guess, what you need to do. Some of these questions I think are probably more for you, asking the forms to transfer insurance policies and like what services you guys would provide.
And insurance policies are not allowed in an IRA. You never transfer an insurance policy into an IRA. Again, there are two things that don't go into in any IRA, and it's life insurance contracts, policies, and collectibles like a fine wine collection or a coin collection. Or you can invest in precious metals. You can invest in what's called numismatics or collectible coins. So life insurance policies never, ever, ever go into an IRA, just so you know. But then if you have, say for example, you've invested in a note where you made a note, maybe you purchased performing or non-performing debt as an asset, you can transfer those assets from custodian to custodian. And our crypto platform, again, it's in its infancy stages, so we will have a formal, announcement when it's all buttoned down. But for now, we're letting current clients use the platform, and of course, it's through Coinbase, so it's running pretty well. But we're about to announce it publicly. We just happened to catch the tip of the iceberg here. And some people were asking, how much do you need to have to start an IRA? So understand with the self-directed IRA, we have an account minimum to leave in the account, which is $325. But you could put $5 in it. It wouldn't make sense for you to do that because you're going to pay $275 a year. You want it to make sense for you. So you pretty much have an alternative asset in mind. Like, hey, this Delaware statutory trust, I really like this. I really like this REIT over here. I really like this piece of property. I really want to invest in this note. I want to get precious metals. You have something in mind. So you need to have enough in the IRA to acquire that asset and cover the fees, like a $15 wire fee, $275 annual fee, that sort of thing. That's the minimum, but otherwise there are no minimums.
So we've got anonymous attendee here asking, if you want to have an anonymity layer to your self-directed IRA, would you suggest having a Wyoming, Nevada LLC as a holding company property? I guess theoretically you could have the IRA LLC own the holding company that invests in the property. So the answer to that would be yes. It's something we could discuss further.
And so Anthony asks here, he says, is it possible to convert a 401k to an IRA? Yes, absolutely. You'd open an account, and then we give you some instructions. You'd call your plan administrator and say, hey, please, roll my money over from this 401k into this new IRA I just opened. Here's the address, here's the account number, please send it over. And then they do. And then your IRA, self-directed IRA is funded.
Jerome asks, can an owner do the management of his property inside an IRA LLC? The technical answer to that would be no. If it's self, it could be considered self-dealing in terms of that sort of thing. If you're getting some sort of benefit, or it could be derived that you're getting a benefit out of that. I think you, like I said, always want to err on the sake of keeping the IRS out of your affairs. So if it's going to cost you a little bit of money to hire somebody to manage it, I think that's probably a good thing.
I agree with you. I think a property manager is an IRA's best friend when it comes to having real estate in your IRA. And there was some recent case law about somebody who was managing their IRA on properties and taking a fee for it, which is receiving personal benefit.
Which is totally wrong. You definitely can't do.
Don't do that. Right? Yeah. But you can, screen the tenants, pick up and collect the rent checks, hire third-party vendors, as long as you're not what they call, how you get taxed when you die, right? You get taxed when you sweat. It's called an overcontribution of sweat equity. And you can't do it in an IRA. So you don't swing the hammers or do any of What else have we got? I think we're good.
So follow-up question. After conversion to LLC, do you file tax under the same EIN to the IRS filed under your personal? You would file under the EIN. I would assume that the LLC is going to obtain is, you know, that's or I'm sorry, or under personal be whatever, you know, it's passed through, so it'll be whatever reporting you use for the IRA. In normal cases, it would be passed through. So
David, I think Lori was asking you specifically, what is the typical fee you charge to set up an LLC in Wyoming?
We normally charge $1,750 is the legal fee for that, plus the fees and costs. And if it's just Wyoming, those fees and costs would probably be in the range of like $600 to $750. If you're looking at another state, like since I'm in California, I'll use California as an example, it may be about $1,100 total to form it in Wyoming and register it here. And that's for your typical run-of-the-mill IRA LLC. If things get a little more complicated or creative, then the fees may vary, but normally, you know, most of the time I'd say the $1,750 is accurate.
Okay, great. All right. Well, if I'll let you guys look at the questions that are remaining. In the meantime, though, I did want to post up a link here to schedule a complimentary consultation with David. And then also I saw Kaaren, you put in your link to open an account. So all of that is in the chat. And I think, you know, if you guys do have more questions, I'll be sending all of this to you tomorrow anyway, so you will have their contact information, all of these links, in case, you know, you can't find the chat or you lose it or something. Don't worry about it. I will send it to you tomorrow. So I just put that link in the chat for David's consultation. Karen's is there too. Do you all see any other questions that you'd like to address before we head out? I think we've almost reached 50 questions. We should probably rename this webinar to 50 questions because that is a lot of questions to go through. You did a great job.
I'll answer anonymous. Yes, you can rent to a brother. It's up and down the family tree. You can't, but your brothers and sisters, nieces and nephews, cousins, aunts and uncles, they're okay. They're allowed, but brothers and sisters are allowed. Yes. And there's a great one for David there about if you live in California, do you have to set up a self-directed LLC in California if you're not investing in real estate in California? Say you want to invest in Florida, Texas, or just invest in crypto.
You know, you ask a bunch of different lawyers, they'll give you a bunch of different answers. If you can truly show that basically all of your activities taking place, say in Florida, for example, then I think you can possibly get away with just being registered in Florida. If there's any, you know, substantive tie to California, you know, for example, if the custodian is in California, for example, you're probably going to want to register it here, because the franchise tax board is very aggressive about that kind of thing. You know, California, as you guys probably all know, is not a very business or tax friendly state. So it's yeah, they're aggressive in enforcement and trying to get what they can. But it would, another one that would take a little bit of more deep diving into. You know, like I said, if you're living in California, yeah, it's definitely a concern. And same thing with crypto. If you're investing in crypto and you're here, I think if your stuff is here in California, I think you'd have to register here. So, although I guess crypto is in the nether sphere.
Anonymous says, can you use an existing LLC for the purposes of an IRA? The answer is no, don't do that. That's a prohibited transaction. You personally own that LLC. It's not going to be used for IRA purposes, right? Right, David?
Correct. Yes.
Okay. And is it reasonable to do without the LLC if an IRA is going to invest in DSTs or REITs? Sure, you don't need an LLC to self-direct, But as David recommends, it does give you asset protection, right?
Yes. Yeah.
People, not everybody has an LLC. And so you just have to ask yourself if you need one, if it's cost effective. Do you have risks? I mean, and do you have risks that need to be covered? And that's a great question to have with your, legal and tax advisors. And there we go, a couple of repeat questions. So I recommend listen to the recorded event because we did cover a lot of this. And the LLC's name can be different from the IRA name. Absolutely, yes. You could name it anything, right, David?
That's correct. And I'd probably recommend you do name it something that's different than than the IRA or what have you. Yeah.
Okay. Great. And can you purchase a property with self-directed IRA money and your cash that you have available for investment outside your IRA? Don't do it. Don't do it. You've got to prove to an IRS auditor, or might have to at some point, that you didn't have personal benefit. So if you took your IRA money and invested it with your personal money, and then you got a rent check, how could you say you didn't benefit from your IRA? How can you say your IRA didn't benefit from you? You can't really say that. So I would never mix personal money with IRA money for that reason. It would be prohibited. Now with IRAs, there's so much you can do, but you just want to know the rules. And that's why we have free consultations as well, so that we can talk to you. Tell us about your deal and who's involved, who are the players, who's involved in the deal? What are you looking to do? What's the asset? And we really want to go deep on it with you. So, and if it's really a gray area, you might have to get a legal opinion letter before you go forward, so that you've got not an insurance policy, but some assurance that you're doing the right thing.
Good point. I'm pretty sure we've wrapped up all the questions.
I think so, yeah.
I'm seeing some that may, like you said, may be repeated. So with that being said, again, last time I will say it, recording sent to you tomorrow, everyone's info tomorrow. Karen's presentation, which she didn't show, but kind of, I think, would summarize basically everything we talked about. Anyway, just this was a much more engaging way, I think, of going about it. So I'm glad it worked out that way. David and Kaaren, thank you so much for your time and your expertise. It's really appreciated. And for those of you on the call, thank you for your questions too. This was a fantastic engagement. I love it when you guys get involved. So I will be in touch with you for our next webinar. But in the meantime, thank you.